2023 has already seen Bitcoin have a 2-month correction. It's also seen it have a correction over 20% twice. And on each of these significant occasions, the majority of the market participants believed the market had to go lower. It had to break previous cycle levels, and this has just not happened. So let's have a look at today what a potential most feared next correction would look like on Bitcoin, what has to happen if the market is to flip from a current bull to a bear, and if we are actually still in the bull market considering where we currently sit. Hit the like and subscribe button. This is your home of macro cycle analysis. You can see all of the data we've been putting out over the last couple of years in these markets, hitting the nail on the head as we study the past to forecast the future across the stock markets, Bitcoin and crypto, commodities, and of course, the biggest asset in the world, real estate, the real estate and economic cycle. Links in the top of the video description are for our membership. I'll leave the majority of the shills to the end so you can see what the data is about. But if you have a niggling to click on that link, this is what you come up with, our free crypto and economic report. All right, let's start with the macro outlook and where we currently sit looking at market sentiment. So we're going to look at some market sentiment today based on a Wall Street cheat sheet, but more importantly, some fear and greed across crypto, fear and greed across the stock market, because eventually we have to have corrections in markets. But what a lot of people fear is that the prices are going to go lower than where they currently were. And what happens is most people, we must know this by now, that most people don't look at charts. They have no idea where the previous significant low points are and what prices those low points are. And for us that want a little bit extra, going that extra mile to level up your own investing and trading, the dates, the time frames, that is the key. Those areas are absolute key, looking at time, because time is more important than price, but I'll leave that for future videos again. Now we have 19,500. We have 24,800 as a round number. We have 15,500 as a low. And on each of these occasions where the market came up and basically feared out the investors, they were all expecting the market to go lower, but it didn't. And I guess what I've talked about here is that these are missed opportunities by the masses. And so each time the market runs up and then corrects, they hope and wait for lower prices. They've seen 22, they've seen 20, they've seen 18, and they want that price to come back so they can get in again, because this time they believe that the market will go up from that point. This time they have the balls to get in at those lower prices. But the market doesn't always give you those second opportunities like that. It typically doesn't give you those second opportunities. It might give you a second opportunity at a slightly higher price, which is what has happened here at 16 to 19.5 and happened again at 24.5. But once people see these prices, it's over. It's basically over if we are still in a bull market. Now, I'm saying we are in a bull market. My thesis hasn't changed. Nothing has changed because the structure hasn't changed. The price point I'm looking at to crush the bull market would have to be a break of 19.5K. Now we can test 24,800. I don't want to see that level broken because it's a key low, it's a key double top, and it's another key low here, which has been tested and bounced away. So that is a key level, but it's not as critical as $19,500, which is why I've maintained that we won't see levels underneath $20,000 again in this bull market cycle. I've talked about that all the way from that low point when that low came in. You would have recalled that from some of the tweets and the videos. I'm trying to give you the reasons for that and how it continues to happen time and time again with this correction. So on with the correction. The next thing that we were looking at was the cycle. So we've got the Wall Street cheat sheet and where we currently sit in this. Now we've got the level of disbelief and depression. My view is, based on what we've seen on the charts, based on what we've seen on the data across Bitcoin and the stock markets, because both have to run in tune together. They run up together, they run almost down together, but Bitcoin obviously has a bigger downside, of course. But the main thing here is that you need to see the stock market go up in order for Bitcoin to go up. And we're definitely seeing the stock markets go up. So this, of course, makes it much easier to forecast what's going to go on with BTC. So we're in this move here, this disbelief, heading up to new higher prices for 2023, for this cycle, for significant time periods, over 200-300 days of higher prices. And many are in this disbelief. It's a sucker's rate, it's going to collapse again. It's not until we break through this area that more of those bears disappear and they flip over to bulls, because we get into a hope stage. A recovery is possible, but of course this is at higher prices. And so they've all missed the bottom. They've missed 15, they've missed 18K, they've missed 20K, probably even missed 22, maybe 24K. And they'll start to get in above 30, above 40,000. And for most people, they're probably going to get in above $50,000 or $60,000. And that leads us into those next moves of this Wall Street cheat sheet, basically the market sentiment, where we get into optimism, belief, thrill, euphoria. This takes plenty of time, probably not until 2024 or 2025 that we'll really start to see the euphoria. We'll have short-term booms and busts where you'll see this in a short-term scale, but in terms of the overall macro, we're still not there yet, and we're through this disbelief stage, because still many are hoping that they get a further correction in the market. So that's our first macro look at a bit of market sentiment, just to keep our heads in check with where we currently are through the feelings of the market. Now, I've brought this up a few times before, so I want to keep adding it into the videos. This is the 18.6-year real estate and economic cycle. This is how the world is made up when it comes to the overall cycles in land prices. And of course, the stock markets also move similarly to this, not exactly onto these dates, but this is the land cycle itself. So we're still looking at further upside here. This is going to go through all of the asset classes across the world. Now, of course, you can pick little key areas around the world. Maybe your neighborhood isn't going up right now, but as we approach the end of this cycle, most things, almost all, will be going up together, and then will peak at some point at that level, 2025, 2026, maybe they extend a touch further, and then you get a very, very, very significant collapse. So at the moment, we're still through this era here. You can see huge infrastructure spending coming through in the Middle East. I can definitely see it in Australia. I definitely see it as I travel around the world through Indonesia, and starting to see it, well, I do see a fair bit of it through some areas of Europe, of course, US, UK, etc. Then we get into this era here. Now, you're probably wondering, how is this even possible with interest rates rising? I've got a little bit of that coming up as well, but banks make it easier. We are starting to see more ways that banks and other institutions are making it easier to find ways to borrow money. It's starting, and it will get more and more. This takes years to play out. So we're into this move here. The macro is still intact. And I just wanted to cover that before I get into the nitty-gritty of the correction itself, because the overall picture can take months and years. The short term, like we've seen, might take 3 weeks, 2 weeks, 8 weeks, and currently 1 week. This is very, very short term when we see corrections like this. And so I just wanted to paint that picture that even if we do get a correction, it's probably nothing to be feared because of the overall picture. The overall picture is still well and truly up. So what have corrections looked like in the past for Bitcoin? Maybe you've seen this multiple times, but essentially you're just looking at, what are these corrections? Look, 30%, 31%, 32%, 33%, 35%, 30%, and so on. You got 40, 26, 14. It's really not too much of an issue. But if you start to use those numbers, the 40%, the 30%, it'll end up extremely low on this chart. You'll be at 30%, will be down at 22K, 40% would take you back down to 19K, and that just doesn't seem likely. It's not impossible. I never want to leave that thing as saying it's completely 100% not going to happen, but it looks very, very unlikely for the structure of the current market. You typically will not see a market take out key turning points. That's a key turning point, and then all of a sudden bounce up. They can take out those levels, but then it happens to be a very long, slow grind to rebuild the breakdown of the structure. So you don't want to see that if you want higher prices within 2023 and 2024. You get a breakdown of these levels, you won't see higher prices past these levels, probably until 2025 or 2026, if not until the next cycle. These levels are the structural, they're the foundation of how Bitcoin is currently sitting. If they break, game over. Forget your altcoin seasons, forget cryptocurrency, forget Bitcoin in this cycle. That's how important these lows are. You can see it in previous cycles as well. This was a key low. It could not break down and consolidate under that level for the next bull market to happen. If the pandemic broke that low, that would be game over. And if it consolidated under these levels, that's basically game over. And if there was to be another game, the game high would be very, very low. You would not have that potential to push to extreme prices, $50,000, $60,000, $70,000. You can go back again, next cycle. If these lows were to be broken, then you just wouldn't have that push up from $200 to $20,000. It would take a much longer time to get anywhere up there, and maybe it only hits $1,000 or $2,000. That's just how structural levels work. That's how technical analysis work. And as a technician of over 12 years now, this is what I've come to learn. I started in 2010. You need those key foundational levels to remain intact in the market in order for it to get that next pump up. So I've titled the video something around the correction is going to disappoint a lot of people because we're looking at the correction to the downside. Now, let's have a look at where some of these levels could come in, the correction, because people are waiting for really, really big numbers to the downside. And you really don't want to see that if we're going to see significant moves up in the near term. 2023, 2024, maybe 2025. We're going to see some significant levels probably in 2024. But if these break down, as I've said, it's not going to happen. So the first pump up from the cycle low to the top, nice, beautiful, 50% correction. You can see just it touched it by a few $100 and bounced. And it wasn't a huge news announcement. That was like the collapse of banks. So expect it to overrun slightly because it happened so quickly with that volatility. A nice bounce out. 50%, beautiful. Can we see it again? All right, top to the next cycle low. Guess what? Yes, we saw it again, 50%. Nice bounce out. 50% was dead on the double top, tested that significant resistance levels, a nice bounce away. Now, what does 50% look like from here? Well, it could be 25.7 because we really haven't seen this move much higher than this, and it's been a shorter move than the two previous moves. You can see that there, and you'll start to notice some things about that. But if we just use this particular level right now, 28,300. So if you want a nice round number to the bottom, $28,000. What does that look like in terms of a percentage? Well, top to the 50% is 11%, and then just to 28K, just for a round number, 12%. So when we think about what people are waiting for, it really doesn't seem that significant compared to where we currently are at $30,000. Another $2,000 move to the downside is approximately call it 6%. So if you're able to wrap your head around some data and key significant levels and starting to structure your risk versus reward, is the risk worth possible? It doesn't say it has to get to 28, no one knows. But if it doesn't get there and it stays around this 29, 29 and a half, maybe 29 flat, is it worth the risk trying to hope for lower prices? As I've laid out, things breaking these levels in particular is not a good sign. So if that's the case and we only get that far, stops are in play under here, game over underneath those levels for the time being. So that's Bitcoin where I see it there. One other key here about how high this move has gone and probably looking for some sort of correction is that we're only at 50% of the extension now. So 100% of that move, there's your 0.1, 0.2, 0.3, and we've gone to 50% and we're failing at 50% at the moment. So we really need to get above this 30.5 and this high here of 32. So 32 is a really key level and 30.5 is a key level. Last time we've hit those levels, we've failed. So we got top to bottom. We can use either of these lows. It's basically, that would be a more significant low there. And you can see the market hit 50% almost on the dollar and then failed, okay? You can see that again on the next move, top, around at these levels here, because you got that first nice big run out of the move, and then it tried again to move and hit 50%, and it failed. But it didn't fail that bad, meaning that it didn't come back and break the significant lows at the next point. So are we about to see that again? I've got my eyes open for that just in case. Ideally for the bulls, we definitely don't want to see it go too much lower than 28. Of course, it can bounce around and quickly get out of that level. That's okay. But in terms of the corrections, we really aren't in a position to be going 40% or more, or even, below this $24,800 and then hoping for higher prices in the near term. Now, another thing to look at is the time frame of this happening. I like price, I like time. We've gone up to this peak for 28 days. So if we look at 50% of time, that's going to be 14 days. So let's go from the top to where we currently are. It's approximately 7 days down. If we take it out to 14 days down, so halfway in terms of that time, 27th of July. Guess what's happening on the 27th of July? The federal funds rate. Looks like the interest rate announcements are approximately at that exact halfway point. So that's at least potentially what the market is doing, just grinding its way lower, waiting for that announcement. And we will likely see extreme volatility. I've got some more charts to get to. We looked at average true range in a previous video just recently this week. So make sure you are subscribed, like the content as well, so you can see it come through. The average true range is starting to flatten out and really die out. For Bitcoin, the same sort of deal for the S&P. It's really starting to flatten out. And when that happens, you see big spikes to the upside. You see a big spike here. The moves get quite significant. So when that happens, well, it could be to the upside, it could be to the downside. Typically, those big moves for the trading ranges happen to the downside, but it doesn't mean that it has to be extreme moves. Now, if I had another 20 minutes for you, I would go through and show you each of these moves in detail, spanning back over 30 years if you want that much data. Otherwise, go ahead and do it yourself, or just trust that these moves to the downside are typically not that much after you get out of the lows. 1980s, this is exactly what's happened this time. We've talked about it in plenty of videos. There's your March bottom. Here's another bottom in around August. Market runs out in 82 into 83. We have a bit of a down move here. That's the biggest you've got, 14% after a nice big move up. 6%, 8%, 10.2%, 9%, 8%, then the 87 collapse. That's a big one, okay? So that's the 87 collapse. We're not there yet. We will get there. We're not there yet. Each of these moves are really insignificant. That's your best one right there. But as you come out of a bear market, out of a low, it doesn't really get too big to the downside, the corrections that is. And you can go through, and I said I wasn't going to do this because we don't have 20 minutes, but you can see that just this one here is 6.5%. None of these moves are that significant past single digits. You might have one or two in here, but the majority of them are not more than single digits in a correction for the S&P. So look at where we currently are. Single digits, we've seen big moves up and down. These have been 12 and 17% up and down. Single digit, let's go to 9% to the downside. That takes us to the 50%, the halfway point where the previous resistance was. Is it going to get there? I don't think so. I don't think we're going to go that far. Typically what we see and have seen, this was the most significant one, was approximately 3 or 4%. There's your move there, 2.7%. Then the next high and the next reversal here on the dailies is 1.65%. So if we went crazy and did 4%, 5%, it's pretty much still at 4,300 points. So that's why these corrections in this first stage moving out of the lows are probably going to be disappointing for the masses because they missed out on the bottom. They're hoping for 3,800, they're hoping for 3,500, they're hoping for anything big so they can scoop it up. And the reason you don't get it, because we've looked at some of the market psychology here, looking at how these moves work, you don't get it because those moves have happened and everyone is waiting for a big move. And so people are buying these up at higher and higher prices, which causes the market to run up quicker and quicker. Yes, we will get corrections, and we're probably due for one. You can see the average true range is dying out here, and eventually we get these nice spikes, which basically coincide with the down moves. And that leads to higher lows forming in the market, leaving more disappointed, leaving that bull market chase going on and on and on. I could go through 2003, 2004, it's the same deal again, very short moves to the downside. So, to wrap this up, we're looking at corrections. We're looking at corrections for Bitcoin, looking at corrections on the stock market because one is going to be happening soon and it has to, the markets have to correct in order for it to be healthy. So we will see a correction. The bull market's not over. The bear market is definitely over. I just want to make that point that the overall macro structure is still intact, but we do have to see corrections. So they're pretty much, I think, going to be short in the single digits from top to bottom, single digits for the S&P. So it's probably not going to be too drastic for Bitcoin if we see a correction. And using the previous cycles as well, when we go back into 2015-16, the big corrections occurred after really significant moves. You can see that market just move right up and the volatility was much more crazy back then. Whereas we haven't seen, we saw in 2019 crazy volatility as well, but we haven't seen crazy volatility in this move. And every time we did see a little bit, it took a while, months, just to calm down, digest the move, bit of crazy volatility, and it jumps to a new high. Look at that, months and months between a trading range of 25K, and you probably could call that top around 29K. So it's very contained in terms of the move, and it's not having those big crazy moves. Same sort of deal has just happened again. So that leads me to believe that we're not going to see crazy dumps to take out the significant levels that I've covered already at the beginning of the video. Healthy corrections, a must. They will definitely happen. So ideally, we hold out above $28-ish thousand for any sort of correction. Still a good time, waiting for this market to come back and start to push to higher prices for the rest of this cycle. And of course, the date's coming up next week. We've got some interest rate news here, federal funds rate. We've gone through the average true range, which I'll continue to cover because it looks like some volatility is coming to these markets. We've covered the potential corrections in terms of percentages for the stock market, which will help us identify what might happen in BTC. And also at the end, they just covered that this move has been relatively systematic on the way up rather than stupid FOMO where it just booms and then busts over a number of months. It has been nice, clean moves up and down. Now, one thing I didn't cover was the fear and greed again. We'll get to this, but the main thing here is it looks like we are putting in a lower high for the fear and greed and higher lows. So we're starting to get to a bit of a point that we need to decide, are we going to be greedy again or are we going to be fearful again? And it could just last a very short period of time like we've seen in the past. Very, very quick moves to the downside. That doesn't mean that the price collapses to new lows. These breakdowns in price were higher than these prices here, even though the fear got more. It's only because the volatility increased. So keep that in mind as well. And then the fear and greed on the stock market, same sort of deal. Lower highs as happened in the past, which is what we will get to as well. Extreme fear, but look at those high levels. Basically the same there. It's crazy. People get extremely fearful, but the price is the same. All right. Thanks once again to all you guys. I want to put a nice quick note at the end here. I had a follower last night when I was at dinner, paid for my dinner. So thank you very much. You don't need to do that, guys. You're welcome to say hello as well. I've met so many people here in Bali, on the beaches, in the cafes, in the gyms. When I met yesterday, Jonas, and the other day I met Jake. So if you guys are watching, hello to you guys. And yeah, coming up saying hello, having a great chat. Thank you very much. Much appreciated. And yeah, you don't have to pay for my meals or anything like that. But of course, I appreciate it. And I just love the community that we have here on the channel, in the membership, all that good stuff. Thanks once again. Like and subscribe. I'll see you at the next video. Have a fantastic weekend. And until next time, have more fun to get more done.